Well, good morning, everyone. Thank you so much for joining us today. I think you can see from the picture up there, I have an illustrious panel with me. I'll just introduce myself and allow my fellow panelists to introduce themselves, and we'll get into the meat of the discussion. My name's Iain Taylor. I'm a board advisor to Crypto UK. Crypto UK is the UK's trade association. We've been advocating for this technology in this industry for nearly a decade now. We're not for profit. I also am Chief Operating Officer for a company called HT Digital, which is a crypto accounting and live attestation firm that does a number of products, both on-chain and off-chain. Okay, that's enough about me. If I can turn to the lovely Kay to my left, and if you could introduce yourself and go along the line.
Good morning, everybody. I'm Kay Swinburne, and although I'm in the House of Lords with that nice fancy title, I spend most of my time doing financial regulation advisory. I spent 10 years in Brussels writing the current financial regulation framework that we have and operate both in the EU and the UK. And I used to work with Iain a few years ago as Vice Chair of KPMG's Financial Services Practice. So I spend a lot of time looking at how TradFi and DeFi are actually starting to converge. And that, for me, at the moment, is my main focus.
Hi, Nat Way, Lord Way. I come actually more historically from the coalface, having worked at McKinsey in technology, and then went through a phase of social entrepreneurship, and then also tech innovation over the last sort of decade or so before getting into the Lords. And now I sit as an advisor to both VC and quite a lot of DeFi projects and initiatives. So really interested in that aspect, and also ultimately the future of governance.
Hi, my name's Iain McNicol, Lord McNicol. I come from a more political background, been in the House of Lords for the last 8 years, where I've been involved with a startup subprime unsecured lender that lends in an ethical way using open banking, and we've now scaled that business, and also sit on the TISA, the Investment and Savings Alliance. I'm board and advisor to a couple of other companies in the finance space.
Well, thank you, everyone. And before we start, I'll also mention that every peer here is a member of the All-Party Parliamentary Group for Crypto and Digital Assets, which does a lot of work in government to really drive the agenda here in the UK. So we're really grateful for your services to that initiative. All right, we're going to talk today a little bit about regulatory compliance, talk about some market development, talk about the opportunities and the threats of digitization of financial markets, for example, and maybe we can also talk specifically about the UK, what it's doing right, and perhaps what it could do better. So let me kick off with UK, if I may. You've been instrumental in crafting financial regulatory frameworks for the EU and the UK, as you said, for many years now. How do you see the UK's role in innovating across multiple financial services, specifically focusing on blockchain? And let me give you, the audience, some examples here. There are some policy initiatives in the UK, Digital Security Sandbox. We love a sandbox in the UK. The Digital Gilt, so that's issuing government debt on chain. And UK Finance, one of the UK's largest industry associations, has launched an initiative to tokenise deposits called the GBTD. It's rebranded. It used to be the RLN, Regulated Liabilities Network. So there are some good initiatives here to support the UK financial innovation, and I do believe the UK does have a great pedigree for innovation in this sector. Do you agree?
I think the UK has been a huge innovator in terms of financial services for a very large number of decades now. The reality for me is that this has been the hub that a lot of fintechs have come to in order to establish their businesses, because there is an ecosystem here, particularly in the City of London, that actually gives you access to all of the expertise and the knowledge base amongst your peers, and therefore you can actually get all the information you require working around you in this particular city. So for me, we need to make sure that our regulated environment for financial services doesn't impede in any way that innovation. And I think it's fair to say that we have had a period where the regulators have been a little slower than many of us who work with industry would like in terms of moving towards a much more digitized future. So for me, they have made progress, but they need to certainly for me accelerate everything. We have been waiting for that digital asset framework to come out and to be published and to now be a framework rather than a consultative document that seems to have gone round and round and round in circles for what has been an age. But that is now on the table. It does mean you now know exactly what it is you have to achieve in order to be a regulated entity in the UK. And for me, that also then means that you have access to what is the jewel in the crown, that global financial centre. You have access to all of that investor capital. You have access to a very sophisticated institutional investor community. So it does open doors. It's been too slow. We are getting there. And for me, things like the digital security sandbox, misnamed because it's not a sandbox at all, it is the next generation. It is a route to market. And so if we get that right, it means that many of the firms in this room and many of those who actually are not in this room, who are much more TradFi rather than DeFi orientated now, will potentially have a route to market with the supervisor working with you in collaboration. So things are moving, but way, way too slowly.
I fully agree with this. We, the All-Party Parliamentary Group, conducted an event yesterday in Parliament with our partners at the Digital Chamber of Commerce, the US's largest industry association. And we've seen a really key transformation in the US market. Analogy I give is I would talk to folks in government at the Department of Trade and Industry 2-3 years ago when the UK announced its initiative to be a crypto innovation centre. It was a government policy initiative which really drove demand into the UK. 5 years ago, Treasury started consulting on regulated stablecoins. 6 years later, we still haven't got a framework. It will go live, but it's just too slow. So let me open it up to the panel, maybe Kay or the rest of the panelists. We've seen a lot of interest in the US because they've passed primary legislation, the Genius Act, the Clarity Bill is being talked about at the moment. Even though they haven't started really consulting on the details of what the regulatory framework would be like, it just seems there's so much interest in that market and it's taking a lot of interest away from the UK. What do you think about that? Is there a risk there that we'll lose investment and capital into the UK market?
So if you take a step back, the FCA a number of years ago were actually ahead of the game in terms of looking at bringing in digital assets, regulation. The conversations were happening, they were reaching out, and this was when there was a different administration in the US. That first mover advantage was something that probably all of us on the panel were encouraging and pushing, and presumably most of you within the room. For whatever reason, the FCA took a bit of a back step and wanted to see what was happening in other jurisdictions, whether that was in the States with the SEC, whether out in the Middle East, and moved back from it. Now, there is a bit of impetus now to look at delivering and delivering quickly, but I think you're going to find quite a lot of agreement, although we're very much different politics on the panel. It's that speed of operation and that speed of integration that is just too slow just now. And if we can help, and if you can help educate, whether it's through the All-Party Parliamentary Group, the politicians. You know, we had a politician on the Treasury Select Committee who, when was asked how should digital assets be regulated, turned around and said, well, it should be regulated by the Gambling Commission. And it's just like, that is a ridiculous statement to make. But that comes down to education. So what we are trying to do, and hopefully can do with support and help from yourselves, is actually bring that level of understanding up. Because if you look at the number of people in the UK who do hold some form of digital asset, digital currency, it's getting close to the 10 of million, yet we still don't have the So I want to continue to push the FCA, Bank of England and the Treasury, and encourage them that we need the right regulation, that it doesn't impede the innovation, the new technologies and the new opportunities. And if we can get that right, we can take it to the next level.
I think I just add to that. I think part of the problem I see is that we have being a victim of our own success. The fact that London, this is still a pretty good place if you want to off-ramp from digital into traditional financial markets. So it's sort of TradFi's success over centuries has created this mentality that, well, other countries can do what they want. We've still got London. People are still going to come here. You've got all the legal, institutional, all the services. So you can kind of say, well, let's just sit back and be, a kind of slow follower or fast follower. America clearly has its agenda. Europe basically wants to protect the consumer at all costs. So, where do we sit? And I think the people that suffer, are the consumers in the UK. You try, right just outside, I was looking at some of the stores. You try and get on any website of the guys outside, and if you're a UK, US citizen, you can't even get in. So you try to educate people, but actually, even if you educate people, you're at risk of financial promotion. So we've got a real problem. And I think if you go back, of course we can. I've got some ideas around how do we, from a rational point of view, kind of shift and actually give it more focus and a bit more vision. But actually, I think that part of the issue is people. There's an emotion. Right? If you're a regulator in this country, you have your comfort zone. You've been regulating, TradFi. You were probably around in 2008. You are now finally getting, rising up to be in charge of the FCA, or prudential regulation, all of the authorities. Your natural career progression, because you've not screwed up, is you get elevated to the next level until finally you're at the top. And now you don't want to screw up at the top even more. So emotionally, your tolerance for risk isn't that high. And you've got an amazing engine, which Kay and others helped to build, which is already delivering. It's like, if you're in the top 3, why risk your position? So I think, to me, we need to kind of help emotionally the regulators have the tools to make wiser decisions. I was thinking the other day, why can't we have a digital twin of the UK digital economy? Maybe you guys can give us some 10% time with the APPG and map for them what happens if you do this. Right? In Web3, we already do this. We already simulate so much. Why can't we simulate for them and show them if you do this, yes, there might be less risk, but B, there'll be less growth. C, consumers will suffer because they're in a very complex environment. The FCA has 3 different objectives, right? All competing with each other. So they have to optimize so much. And frankly, if you're used to regulating traditional finance, things move much faster in this space. So they need those tools and ultimately need to learn how to design the regulation in such a way that, yes, there might be a bit of risk, yes, there might be a bit of failure, but let's design the products and the tools to not have no risk, but mitigate the blast zone of any risk, which is, I think, aligns anyway with traditional regulatory. They just haven't figured out how to do that in this space.
But before we come to Lord McNicol's question, Kay, I may maybe turn to you because you do a lot of consulting with all the world-class regulators. And my view is at the moment the balance between protecting consumer risks and providing good products and services with less frictions on the journey for the user experience is somewhat skewed to overprotection. What do you think?
It is, but I spent last week in the States. So I spent half the week in New York and then went over to San Fran. And was so impressed by the way in which people are trying to facilitate access to the capital markets. And so it's much more of a facilitation role rather than a prevention role or an enforcement or supervisory role that the regulators are trying to take. And what struck me was that, yes, the Genius Act has been passed and we're waiting for the Clarity Act. The reality is they are just very high-level words. The rules are still in the making. When the FCA publishes what they publish, everything will be done. So we also shouldn't conflate the fact that it's taken so long to get there. When they do get there, they will be the end product. Whereas in the US, they are still working out what that actually means, that both the SEC, CFTC, and some of the regional regulators who are still arguing over what the definition of some of these products are in the US. So it's not quite as cut and dried as it sounds when you talk about the speed at which the US is going at. What the US isn't doing is preventing innovation right now, and they're not preventing people to actually start and launch and to work in this space. And when I challenged yesterday the PRA about, well, you are not allowing that. And they said, yes, we are. And they pushed back very, very strongly and said, what do you think that digital security sandbox is for? That is for exactly that to happen. And, we talked about the name sandbox. It is a route to market. And therefore, it is exactly the same thing as you have in the US, but you're already under a regulatory umbrella, which they have effectively said, we are actually going to put aside the current rules under this scheme, which will allow you to actually do what you need to do to demonstrate that this is working and suits your clients. So I think we are actually in some ways in a very similar place, but the rhetoric and the way people are thinking of it still isn't there. And so I'm hoping that when we come back next year, we will have a very different dialogue, because people will have gone to the regulator and said, this is what I want to do, this is how I'm doing it, and you will all either be in that route to market that has been set up by the PRA and FCA as a combined effort, or you will already have, under the regulatory framework, decided this is how I'm going to do this. So, I'm hoping that we're finally breaking through on this. And if we have to go on the US coattails, I am really happy to do that.
Me too. And that's actually a nice segue to your question, Lord McNicol. And yesterday we were talking specifically about the US with the Digital Chamber, and the government change in the US. Really, the policy position was digital assets are at the top of the agenda, and that's now cascaded through all the different agencies. There was a lot of press in Parliament yesterday. Will you put your hat in the ring for the leadership of the Labour Party? We'd love to have somebody that supports our industry running the country. But that aside, we won't talk about the M word today on this panel. As an important member of the Labour Party and the current government, and you've been a long-term supporter of this industry, as we mentioned, and you also have a role as envoy to, you mentioned Kuwait, Jordan and Palestine in the Middle East. You have an impressive business background and a very long-standing political career. Are there some policies that you would like to see that we should do more in the UK to really drive not just innovation in blockchain, but other tech space?
So I think Kay and Nat have touched on a few of them. Let me give you a practical example. So I also chair the Nuclear Industry Association. Yesterday, the government launched an advanced manufacturing plan for the nuclear industry. And in reality, what it is, it's an alternative route to market. So the nuclear, the big gigawatts have been built and funded by the government with regulation through the ONR. Last year, a decision was made for the first small modular reactor. Now, it's relevant to this industry, to the hyperscalers, because of the amount of energy that's required. That support that the government have done through the government programme, the SMR programme, is to back Rolls-Royce and GB, Great British Energy Nuclear, to build the first SMR within the UK. Yesterday, they opened up with a concierge service through Great British Energy Nuclear, a way for other businesses who are building SMR, small modular reactors, and AMR, advanced modular reactors, to come into the UK and to build those outside of the government support. What I would love to see is that the FCA taking and learning from that in terms of the opportunities to support new businesses, new organisations, as we look to develop them and to scale them. So the government does understand, and the Treasury are spending quite a lot of time looking at the regulatory oversight. Again, within the nuclear industry, they've just done a big job, a big report looking at the ONR, the Office for Nuclear Regulation, with a whole set of recommendations that will still protect safety, keep it at the highest level, but look at regulation that is happening, whether it's in America, Canada, or Japan, or Europe, and how that can be transposed and worked with and brought over, so that we can develop and learn from each other. I would love to see some of that, or more of that, in and around digital assets and blockchain.
Well, that's actually a really key, interesting point, because energy, freedom, and the production to comply with the increased demand is critical infrastructure for any economy. And so that is a really powerful message, just as the message in the US was, we need to protect the dollar. And so that geopolitical, if you like, advocacy to get support from your government for your particular industry, how can we do that for crypto and blockchain in the UK? Well, what's the messaging that's missing for us to be able to get a little bit more, how can I say it, resource, attention, mindshare from the government, who's obviously got a lot on its plate with many things?
I think it's events like this, it's panels like this where you're bringing up politicians from across the political spectrum. It's work that the all-party parliamentary group are doing. I think it's making sure that the voice, the concerns and the issues are understood and heard across government. If the Bank of England I'm looking at, and yes, it's fiat, but CBDC, the Bank of England are far further ahead in their analysis discussions about what a CBDC would look like for the UK than we are in Westminster, whether that's in the House of Commons or in the House of Lords. Most politicians don't understand that it is fiat. It isn't actually a digital currency. But if we can help support the bank, the Treasury, move forward with the right development of a CBDC, then it starts to change the language around digital assets, around blockchain, around DeFi. So I think it's just actually talking about it more and raising the issues more.
I mean, I wonder, there's a part of me that wonders whether politicians regulating digital assets is a little bit like politicians regulating interest rates. It's a bit specialist and a world away from your constituency and all your day-to-day concerns. But having said that, one thought to educate not just politicians but also regulators is, how do we recreate the actual experience, the user interface? Because when you're a regulator, you're at the top of the chain. You see the systemic risk all around. You've got career risk, etc. I almost wonder whether we should have a kind of league table of regulators. Literally take the top 3 people and their staff, each have a charity account, and actually help them, have exposure to different types of crypto assets, and then get them to try and get into the website, or get them to try and, trade, not as them as natural persons, but them as an avatar. Does that make sense? And then also link all the policies that they're generating, either from the Treasury or the FCA or and actually go, okay, let's dissect each policy and predict which one is going to work and which one's going to fail. Because the problem you have in regulation is you see the downside. Downside is always more visible. You don't see, you failed because this has slowed down the UK economy. You failed because the average Joe in Newcastle can't access crypto and have a better life. Their return. So in a sense, you want to give them a kind of, each regulator, if you were playing this kind of charity league table, where whichever part of the regulatory infrastructure wins can donate to whichever charity. It's like, here's your 3 people. One is somebody who's very low income. Here's your average business. Here's your institution in the city, and actually show them what what it's going to look like over the next 5 or 10 years as they implement all these different rules, and see who wins. And actually, if they don't even log in, they don't even bother, then you probably know they actually aren't really knowing what they're talking about, because they haven't actually traded or engaged personally, even if by proxy, with this technology. And I think a lot at the moment is almost treating it like it's just like a traditional financial asset that needs to be regulated. No, this is different. DeFi and TradFi are not the same, and you have to know the difference.
Yeah, we always say that the regulator here is trying to put a square peg in a round hole using existing frameworks that exist that don't work for many reasons. But just I'll come to our final question now for you, Nat. As a social entrepreneur and serial investor in many areas of technology, what would you like to see on top of that good suggestion there regarding try some of these services yourself for the government and different agencies to ensure the UK does continue its pedigree as a financial innovation centre?
Yeah, I think a simple approach, and we've seen this, I used to work at McKinsey, I think Goldman, you get rid of the worst performing 10%. I think every year the regulators should just literally sunset the regulations automatically that are not working. They're not delivering either in terms of risk management, fraud protection, consumer protection, and especially growth, especially innovation. I think if you literally got rid automatically of 10, let's say 10 or 20% of what's not working, over time the system should clean out. I think the problem we have right now is that we have just regulatory accrual in more and more things. I mean, how many of you have had issues with your bank lately? Something that was designed to be a 1 in 5, 10-year event is becoming, for most people, I remember one of my businesses got a letter from their bank on Christmas Eve giving them 2 weeks to respond, otherwise they'll shut their bank account. Right? Your automated systems are now actually causing business continuity risk, going all the way back to the global financial crisis. But unfortunately, as you heaping regulation on and not removing any, we have the longest tax regulatory book, I think 30,000 pages in this country. At what point do we start getting rid of some of it because we've got too much?
Yeah, the FCA handbook's only getting thicker. I can't see it being trimmed down and deregulation at any time in the near future with this current administration. But just sort of finally, I'd just like to say the key message here is please do engage with whether it's your local constituent or all-party parliamentary group or industry associations, because it does matter. Those little voices do get heard and can force change. So I think just in the last minute here, I'd just like to thank my panel for joining us today, supporting the event and also supporting our industry. And if you could please join me in a round of applause. Thank you.